Hello? Hello? This is so fucking stupid. This is so fucking stupid. This is so fucking stupid. Like, what the fuck is that scraping? Like, what the fuck is that scraping? Hello? 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 Why the fuck is it scraping? Why the fuck is it scraping? Why the fuck is it scraping? Let's AI it. Let's AI it. Let's AI it. This is so fucking gay. This is so fucking gay. This is so fucking gay. Hello? Like, what the fuck is going on? Like, what the fuck is going on? Like, what the fuck is going on? Hello? 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 Okay, so I'm using my old microphone. Like, one day it fucking works, the webcam microphone. The next day it doesn't fucking work. Hello? Alright. Basically what I'm doing is I got my trading view. Free version. You can see I have November 2022. My latest was 2024. I'm going to make that 2024 plus. And then I got like my sections: real estate, retail, services, technology, internet, healthcare, finance, energy, airlines, whatever. So I'm just going to go to my 2024 list. And I got Berkshire Hathaway, Valero Energy, Blackstone, Uber, Amazon, Tesla, Netflix, Meta, Google, Microsoft, Apple. Disney, Nvidia. What the fuck is Applovin? The bond market, the major indexes of the Nasdaq and the S&P 500, the small caps, the mid caps, the large caps, and the Jet ETF. So I don't got any. I'm not aware of any software that goes into your fucking trading view or your screener and helps you find stocks. There's AI software that integrates with your music production, video production, photos, documents. Mainly, you just use it separately and then copy and paste it into your workstation. So we got AI for everything, plus the chat bot. And now we're going to test it out if it works for investing. So the AI I use, and I got my little expenses, my stock history spreadsheet. It goes October 2017 to December 2018. So 1 year. Then after 2018, I got January 2019 to January 2020. And then 2021, 2022, 2023, 2024, 2025. And I just made this 2026. As you can see, what the fuck is in them. Basically, the stock, the sector, the prices bought and sold, the number of shares, the dates bought and sold. And I could do position size, profit and loss, percent change, and notes. Now, a lot of it's also fake as well, so it doesn't matter if it's fake or real. You can separate, you can write another column for fake or real. Like this one was real. So that's why I got return Canadian dollars, return percent trades, fees paid. It was $6 per fee per trade. Return without fees, total return with fees. At the end of the year, started with currency conversion rate. So this one was real, but later there was some fake in there as well. And basically I just had, and other than these, that's for swing trading, which means positional. And then I got my day trading. Actually, let's put this here. Here's my options, my investing thesis, and day trading history and results and testing. I integrate this with my FinViz screener. So screening for metrics, especially for day trading at the start of the day. And then I go into my broker account to actually place the trades. And for data, I use TradingView. So that's how I'd make my day trades. And if you want to practice, you can also practice in here by clicking this replay bar. So you click replay here. and shift and forward is the next tick. So let's zoom in. So now watch. So you see it goes step by step, day by day, and you can practice like that, replaying. And you can also click this button down here and go to a specific date. So in my screener, I would search up. The screener can't go backwards. That's what pisses me off. So every day I gotta write down the potential stocks to day trade. And then when the day is over, or if I don't trade that day, I still got a history. And I can go back, select stock by stock each day and practice. And then do replay from the whole day by the minute and put it into my day trade back test right here. That's what I'll day trade. And then I got some options, which let's do this. Call strike, put strike, call strike, put strike, call strike, put strike. Azul long straddle. Let's go like this. I'm not too familiar with options, but what I was doing was swing trading and day trading, which is your basic investing and trades by the second or minute. And then you got options. And then you got cryptocurrency, which is like day trading, but just for cryptocurrency. And that market lasts 24 hours. And then you got Forex, which is trading currencies, like currency conversions. And that also lasts 24 hours. And then the last thing you have is futures and commodities. So futures are you're betting 8 years ahead, 8 months ahead, 8 months ahead. And commodities are like your big quantities: coffee, sugar, spices, oil, whatever. I don't fucking know. Just your big, big copper, silver, big bulk. So let's just add that. Let's add uh rename this to commodities, futures, and Forex. Now I got everything. I got options, commodities, futures, Forex, day trading, which I know of, investing, backtesting, and all the way from 2017 to 2026. That's 10 years. Let's rename this to 2026 AI. So now we're going to try to do, and my investing backtest thing was investing in indices. This was like you just basically buy the ETF of the S&P 500 and the Nasdaq, and you can get weighted leveraged ones, so they move double and triple the price. And the theory is it always increases for the past 100 years. So you just buy it and hold it. And the only thing you gotta manage is the distribution. So which ETF you're buying. And to sprinkle in some more volatility and risk, you can do some Bitcoin. So I got 70% in SPY, which is the S&P 500, 10% in UPRO, which is the double or triple, and 10% SSO, which is the double, and 10% in Bitcoin. That's my distribution. And I basically did a research from 2010 to 2023, or from 2000 to 2023. And it's a 300% return for buy and hold for 25 years. And the risks associated with it. So I got the starting position and the risks and the data. And here are my indices: S&P 500, Nasdaq, and weighted. But let's go now into 2026. And let's see what AI. For AI, I'm using Copilot. Let's go. The major indices I watch are the QQQ and SPY, Nasdaq, and S&P 500. I invest into these indices as ETFs to buy and hold, including the leveraged options for double the price swings. I also keep an eye out on the major players such as Apple, Facebook, Tesla, Google, Microsoft, Amazon, Nvidia, Uber, Netflix. What else am I fucking missing? Did I get Apple, Nvidia? And maybe some ETFs that are at good values, such as Jets or Resources Energy. Can you find the best value? Now I need criteria for my $10,000 portfolio with picks based off the standard best metrics such as EV, EBITDA, ROE, ROIC, ROA. Those are my returns and my valuation. So how pricey it is, how well it performs, the equity sales and earnings growth, as well as fucking competitive future advantages and outlook. So that's my prompt. Let's see what it spits out. Taking a while. But I'm glad I did the full prompt so I can wait. Well, let me write down what I did here. Start under reasons. Remember, I got reasons. And you can also add Python into, I don't know where Python is on mine, but you can add Python into here, which is programming, and write code for your cells. Like add all these, find the greatest number, find the average number, sort by this, graph it into a table, chart, whatever. So you can also use a little bit of programming in Excel. But my reasons are metrics such as EV, EBIT, ROE, ROA, ROIC, sales and revenue, future advantages, what else did I say? Debt equity, ETFs and major ETFs and major movers from the indices. And time for the grand review. Also, it basically spits out more data. Margins as well, okay. I'm gonna put margins in as well. So I got QQQ, SPY, so SPY is about 30% and QQQ is 45%. 45%, 30% valuation. The QQQ is better, which is the NASDAQ. And now it did my big players. NVIDIA has an AI compute monopoly, unmatched ecosystem. So let's just go NVIDIA, AI economy monopoly. Microsoft integration. Enterprise lock-in. Apple brand services growth. Amazon, AWS, logistics, boat, Google. So they're all monopolies. Search monopoly, AI. Meta, AI ads, social, king, I'll write that. Tesla, vertical integration, automation. Whatever the fuck it means. Alright, they all have high returns. They here. All have high returns and margins. That's a good list. And earnings. And then it broke down QQQ 30% portfolio. No, so my ETF QQQ 40% portfolio, SPY 30% portfolio, Mega Stocks 20%. 20% for Mega Stocks. And energy value ETFs, XLE, 10%. Diversify cash flow. Mega cap stocks, best returns, and my indices are low volatility. And that's what it said. Oh, and you can do conservative, more conservative, or aggressive. So let's put a reason. Whether conservative or aggressive, it recommends QQ as the highest district allocation. allocation. So that's what you got here. You got your let's go like your mega players, your indices, and your energy. And then you could add Bitcoin, Forex, commodity, futures. And add that. What about Bitcoin, commodity, futures, and Forex? So it adds some cyclical stuff to it. So it says cyclical ETF and returns. And inflation and diversity, of course, and volatility. All right, so inflation, diversity. Whew. Cyclical ETF returns, inflation, diversity, volatility. What happened here? Oh, I'm missing. Wait a minute. Apple. Or is it AI monopoly? So the Nasdaq is the primary growth, 40 to 50%. Your S&P 500 is your safety, 30%. And your capitalism stocks are 20%. And your cyclical diversification for energy or other ETFs are 10%. And then you could throw in some Bitcoin Forex and commodity futures, which are also some more diversity, inflation, and volatility. And let's do this one again. But basically, you gotta find. I either do fucking the indices, S&P 500, Nasdaq, or the biggest players in the game. And then some extra diversification for energy and commodity and Bitcoin for inflation and diversification and volatility. And these are like 30% return. These are maybe 15% return. I'd say 20. And these are 25. Your S&P 500, that's 20. Your Nasdaq is say 40. And that's what you got. Price sold July 7, 2027. And I'm just missing Disney and Uber. Mainly Disney. Let's put that here. All right, that's about it for 2026. And I got my indices, my day trading, and yeah. That's strategy. So AI, not much of a help except for searching. It will tell you the data you need. Now, whether that data is accurate or not, that's the thing. Investing in public companies, all the data is supposed to be public, right? But it's missing years and such. So if you want to go back 10 years, 5 years, or even just 1 year, every single website is going to tell you a different number. So you just got to ballpark it. That's about it. The big players, your indices, your diversification into other ETFs, and your commodity Bitcoin, Forex, futures, options, and your favorite companies. That's it. And then keep a record, track the progress, track the fees, be patient, and manage volatility. Understand that crap goes up and down. One thing we got to do is trim profits 50% and reinvest dips. So trim profits and reinvest dips. So average trim profits by taking 50% off. Trim profits by taking 50% off and reinvest dips every 8% drop. Here I'm going to write patience and emotion. And be a little mathematical. I'll put that here. That about does it for investing. Word and onwards. Bye.